Welcome back. It's Simply Bitcoin. We break down the news from Twitter, the daily fail, meme review, software releases, hardware releases, and the websites by plebes or plebs. All right, we're going to the numbers. Let's do it.
Number time! Sponsored by
Bitcoin 2022. Get your tickets now for Bitcoin 2022. It's going to be the largest and best Bitcoin conference. Check out the link below for a 10% off. At the time of this recording, the block height is 706,848. The Bitcoin price, 60,790. Chain rewrite days, 812. Total public lightning capacity, 3,149.87. Sats per dollar. Moscow time, 1645. Blocks to the halving, 133,152. Well, we're at a new all-time high on the public lightning capacity, and I know that right now, as we speak, we're making a giant, ugly red candle down on the Kaka price. So
are we?
Yeah, we are.
But it's not a giant red candle.
Well, for the relatively speaking, it's big. You know, like relatively, you know, it's like from it's like down from like 63 to like 61.
Oh, I wasn't even paying attention.
Yeah.
You've been paying attention. Oh yeah, you've been paying
attention. Dude, I watch it all the time. Yeah, so we just did from like 62 down to like 60,000. 60,770. I should be stacking right now, actually.
You see, that's a true Bitcoiner, ladies and gentlemen. He's stacking when the price is dipping. That's how you have to do it. But yeah, man, the noise is definitely the Kaka price. Can't help to like pay attention to it. But the signal there is the Lightning Network capacity. It continues to go parabolic. That's super freaking awesome. But anyways, Phil, it's time for
the Daily Fail, sponsored by. Check out piratehash.com for some really cool Bitcoin collectibles. They got the Genesis block poster, Run the Numbers poster if you're into that type of stuff. And if you really want to get crazy, you can always go and check out the Support the Hodler of Last Resort Bitcoin board game. Check it out, piratehash.com. Shout out to Sai or ICOsonot for once again tagging us in some fun. Now, I hope everybody has done some stretching. Nico, especially you. I hope you've stretched, because we are about to do some mental gymnastics. Okay? I'm going to need everybody to follow along, because it's about to get very stupid, and it's about to get slightly confusing. Okay? Let's dive into this. First, let's see who tweeted this show out. Okay? Let's see. It's Patrick W. Watson. Economics journalist, editor at Malden Econ, covering global macro, central banks, econ policies, geopolitics. Animal lover, so I give him a shout out for that. At least he's an animal lover. Unfortunately, he has terrible, confusing takes and wants to imply Bitcoin. So, okay, we're going to back up before we get into this. You remember how we told you that, you know, that they're going to start to blame Bitcoin for everything, and eventually they are going to start to blame Bitcoin for the financial collapse? And then we showed that Guardian article, which was already leading to that, saying that Bitcoin is going to lead to financial problems. Okay. Check this out. This is really, yeah, get ready. Gymnastics, here we go. For anyone wondering what has been driving inflation, here's a hint. Okay, now check this out. Look at the energy chart. Housing, food. Okay. All right. So energy is driving inflation. Keep that in mind. Let's proceed. What is taking all this energy, you might ask? That's right. Get ready. Bitcoin's causing inflation, guys. Take a look at this. So he puts this Coinbase chart as to what's causing the price of energy to go up.
So hold on a second, because technically that chart is right. Why is it right? Because the Bitcoin price, in our opinion, is the actual representation of inflation. Just saying.
It's true, but he's trying to blame Bitcoin for something that started many, many years ago and that has nothing to do with Bitcoin, okay? Look, in the 80s, okay, they were already indoctrinating us with the energy crisis and the energy problems. That was long before Bitcoin. So, yeah. This doesn't make any sense. Anyways, let's proceed. Okay, so obviously this meant this leap that we had to do to try to understand this argument got me thinking about Bitcoin's energy consumption, right? So, and then it just got me thinking, okay, so he wants to blame the energy inflation on Bitcoin alone somehow and wants to negate everything else. But first, obviously, he shows this energy, housing, and food chart. Okay, so let's take a look at what are the major sources and users of energy in the United States? Okay? We're not going to dive into the whole article. We're just going to do a quick summary. The industrial sector uses 32%. The transportation sector uses 29%. The residential sector uses 20%. And the commercial sector uses 18%. So already, his whole simpleton narrative just begins to crumble. Now we're going to move on to a great article written by Nick Carter. How much energy does Bitcoin actually consume? So you guys are going to have the link in the show notes so you could dive in and do the full read. But here's some stuff that I highlighted out that, kind of relates back, right, to this ridiculous original tweet by Mr. Watson, who obviously is not such a great detective. Sherlock and Watson. Anyways, bad joke. I'm an old person. Okay, here we go. Figuring out how much consumption is too much is a complex question that's intertwined with debates around our priorities as a society. The calculation of which goods and services are worth spending these resources on, after all, is really a question of values. This brings up a very good point, okay? Before we go on, people that don't understand Bitcoin, so even backing up, people who don't understand money, right, think that it's okay that we just print it all. Okay, they just don't get it. This is like the MMT proponents. These are the people that think that inflation isn't happening. But when you do understand money and then you come to understand Bitcoin, you realize quickly that the value, right, the costs of securing the network and of producing Bitcoin is very much worth it when you take a look at the absolute garbage that our fiat system has funded thus far. Anyways, all right, let's continue on. Bitcoin currently consumes around 110 terawatt hours per year, or 0.55% of global electricity production, or roughly equivalent to the annual energy draw of small countries like Malaysia or Sweden. This certainly sounds like a lot of energy, but how much energy should a monetary system consume? And keep in mind, Bitcoin's a global monetary system. Anyone can opt in or opt out. Okay? It's very important. If you believe that Bitcoin offers no utility beyond serving as a Ponzi scheme or a device for money laundering, then it would only be logical to conclude that consuming any amount of energy is wasteful. If you are one of the tens of millions of individuals worldwide using it as a tool to escape monetary repression, inflation, or capital controls, you most likely think that energy is extremely well spent. Whether you feel Bitcoin has a valid claim on society's resources boils down to how much value you think Bitcoin creates for society. I enjoy his philosophical standpoint on this because I think it matters very much. I think that a lot of our skewed understanding of things has made it possible for these scams to not only proliferate, but to be validated by all of us as a whole in society. Anyways. Understanding Bitcoin's energy consumption may not settle questions about its usefulness, but it can help to contextualize how much of an environmental impact Bitcoin advocates are really talking about making. Specifically, there are a few key misconceptions worth addressing. All right, let's dive into it. Energy consumption is not equivalent to carbon emissions. In December 2019, one report suggested that 73% of Bitcoin's energy consumption was carbon neutral, largely due to the abundance of hydropower in major mining hubs such as Southwest China and Scandinavia. On the other hand, the CCAF estimated in September 2020 that the figure is closer to 39%. But even if the lower number is correct, that's still almost twice as much as the US grid, suggesting that looking at energy consumption alone is hardly a reliable method for determining Bitcoin's carbon emissions. Bitcoin can only use energy that other industries can't. Bitcoin can use energy that other industries can't. And that's also a key point, right? All of a sudden, we have flourishing businesses around places that prior didn't have. You know, they're in the middle of nowhere and they had nobody to sell their stock to. Anyways, another key factor that makes Bitcoin's energy consumption different from that of most other industries is that Bitcoin can be mined anywhere. Almost all the energy used worldwide must be produced relatively close to its end users, but Bitcoin has no such limitation, enabling miners to utilize power sources that are inaccessible for most other applications. Another promising avenue for carbon neutral mining is flared natural gas. The process of oil extraction today releases a significant amount of natural gas as a byproduct, energy that pollutes the environment without ever making it to the grid. Since it's constrained to the location of remote oil mines, most traditional applications have historically been unable to effectively leverage that energy until Bitcoin. But Bitcoin miners from North Dakota to Siberia have seized the opportunity to monetize this otherwise wasted resource. And some companies are even exploring ways to further reduce emissions by combusting the gas in a more controlled manner. Of course, this is still a minor player in today's Bitcoin mining arena. This is true, but check this out, okay? Back of the envelope calculations suggest that there's enough flared natural gas in the US and Canada alone to run the entire Bitcoin network. I want you guys to really pay attention to that, okay? This is very interesting because this is something that all the major pundits always omit, okay? This was one of the reasons that people like Paul Krugman thought that the internet was going to suck up all the energy back in like 1995. Was it even him? I don't even remember. But one of these totes, right? You know, like, it's ridiculous. It's complete nonsense. Obviously, they're completely wrong. We are 2022. The internet has not swallowed the entire world's energy. And here we are complaining that Bitcoin is now going to swallow the world and destroy all the energy. Anyways, I continue. Oil is and will continue to be extracted for the foreseeable future, exploiting a natural byproduct of the process and potentially even reducing its environmental impact is a net positive. And that's right. By having Bitcoin miners moving out close to these oil wells, like close to even smelters and stuff like that, all of a sudden they're creating economies there. All of a sudden, these resources are no longer being wasted. That should actually be, kind of a thumbs up from the, the ESG geniuses, but it's not. Anyways. Regions with the capacity to produce more energy than could be consumed locally, such as Iceland, Sichuan, and Yunnan, became net energy exporters through aluminum. And today, the same conditions that incentivized their investment in smelting have made those locations prime options for mining Bitcoin. There are even a number of former aluminum smelters, such as the Hydro Alcoa plant in Messina, New York, that have been directly repurposed as Bitcoin mines. It's important to understand that many environmental concerns are exaggerated or based on flawed assumptions or misunderstandings of how the Bitcoin protocol works. That means that when we ask, is Bitcoin worth its environmental impact, the actual negative impact we're talking about is likely a lot less alarming than you might think. But there's no denying that Bitcoin, like almost everything else that adds value in our society, does consume resources. Okay. So all of this, guys, all of this, just to tie right back into what this person has said, somehow energy consumption is driving inflation, and that energy consumption is coming from Bitcoin. Okay? I want you to think about that. It makes absolutely no sense. And don't get me wrong, but you'd really expect a lot more out of somebody that has all those credentials, right? Than like taking two completely unrelated things, putting them together and deciding that all of a sudden the last 12 years of Bitcoin is somehow responsible for the giant spike in energy prices? Bitcoin uses, as you've said many times, Bitcoin uses stranded energy. Sorry, go.
No, absolutely right. Bitcoin uses, right, and just to give everyone a little bit of context, right, if you don't understand how energy production works, but energy production is not the same as oil production, right? You could store oil. You can't store energy effectively. And you can't transport it over a long distance. So what that creates is it creates a lot of stranded energy. So it's not that Bitcoin wastes energy per se. Bitcoin uses energy that was already going to waste, because if it wasn't already going to waste, it would be too expensive for the miner, right? You can't use residential electricity to mine Bitcoin. You'll be profitable maybe in the bull markets, right? But as soon as a bear market, as soon as like we start going sideways, you're going to get priced out, right, by people that have more cheaper electricity. So the biggest Bitcoin mines are in places where they have very cheap electricity. And the basic law, supply and demand is, right, if there's a lot of supply, right, that means that there's not a lot of demand, which is why the prices are so cheap for those miners. So that being said, I find it hilarious that, and I'm going to tie it up with something that I've read in The Sovereign Individual today, and like finishing up the book, this is the second time I read it. And he said something fascinating. He said that they did a study or something that essentially people's whose job depends on not understanding what it is they're supposed to understand, they will not understand it, right? Yep. So I think that's what you're seeing with this gentleman with the blue check mark, I think. You're seeing the same thing. You're seeing cognitive dissonance, right? You're seeing inflation is caused by the record amount of money printing that we're living through, but he's looking at every other place rather than that himself. And, you kind of tie it up with what his job is, right? He says he's a journalist of central banks, of, it's all the fiat system. So I think maybe he thinks that if the fiat system goes away, it could potentially threaten, his employment. And I see the same thing with a buddy of mine who works at Goldman Sachs. And dude, it's been 5 years of me imagine buying Bitcoin 5 years ago, which is when I first told him, or 5 or 6 years ago. And he's the only one of my friends that doesn't own Bitcoin. And again, it's back to the comment or the passage from The Sovereign Individual. If your job depends on not understanding something, then you don't understand it, right? Mm-hmm. So very fascinating, human psychology there. But anyways, Phil, it's time for the Daily Meme Review, sponsored by... Check out Citadel 21 for the best Bitcoin cultural zine. It's news by plebs for plebs. Get yourself a physical copy. There's literally only 1,000 made. Super awesome zine. Get yourself a copy of Citadel 21. All right, everybody. Welcome to the Meme Review. Sometimes, you guys know the drill. Sometimes we cover pictures. Sometimes we don't also cover memes. And exactly what Phil said, a lot of pleb signal here. Right? Check it out. Phil was nice enough to take a screenshot of Steve Hanky the Panky. He's not even looking at us in the eyes, Phil.
No, he's not. He's looking somewhere else. You know what?
It's a bad sign.
You know what it is? He's trying to figure out who farted. That's what happened. That's exactly what happened. That's the look right there. He's like, what?
Can't even look at us in the eyes. Anyways.
The word. Of course he can't. He's lying through his teeth. Okay.
So, Steve Hanky the Panky. Said this infamous tweet, which we covered, right? Why Twitter CEO and hashtag crypto investor Jack continues to make, no. Bitcoin investor, anyways, continues to make unfounded assertions about impending U.S. inflation. Unfounded. Okay, fine. That hyperinflation, it's not happening right now, but Bitcoiners have been pretty spot on about inflation in general, right? And you contrast that with what you're getting from the establishment media. They've been lying through their teeth, right? So if you've been listening to what Hanky is saying, right, some tweets he's completely contradicting himself, and the others he's telling the truth. But anyways, the signal here is, which is why we did it on a meme review, is that he had 111 comments and 66 likes, right? And then Bitcoin is Saving said, fact check, The continental dollar and the Confederate dollar both hyperinflated. The U.S. has experienced hyperinflation at least twice. Please learn about the history of troubled currencies before tweeting, right? So again, Steve Hanke is doing the typical, kind of cherry picking. And this brings me to my next tweet, right? Put the politics aside. We're not interested in fiat politics, right? But focus on this. Journalists now, right? And I want you to focus on that. Never question what the government and big corporations are telling you, right? So kind of put this together with the inflation thing that we were talking about. If you were listening to mainstream media sources, they were taking what Yellen was saying and, the administration, right, verbatim, right? And we just want to clarify, we don't lean left or right. We're apolitical. We stand for Bitcoin, right? So that being said, isn't it a journalist's job to question, right? Isn't that their purpose? And here that goes to, journalists then always question what the government and big corporations are telling you, right? So again, very interesting. It's funny that two Bitcoin YouTubers or two Bitcoin show people are more accurately telling you what was going to happen to inflation because of the historic amount of money printing than the mainstream media, right? Which is why I think this meme was so effective. Moving on to the next one. Absolutely hilarious. It's Klaus Schwab with the Bitcoin standard. You'll own Bitcoin. You'll be happy. The Great Reset, build back better with the centralized alternative to central banking. Beautiful, beautiful meme. I don't know if it's by this person, but I would definitely give him a shout out anyway. Ipo Lumberg Epoxy, definitely a fellow pleb. Give him a follow. And for that, Phil, I'm going to give it my deodorant. What about you?
Woo! Like that. Powerful score. And it's deodorant, right? Not antiperspirant.
It's deodorant. I don't like antiperspirant.
You can't wear antiperspirant. That's what causes cancer.
It's bad for you, no? It has iron.
It is. It clogs your pores. Anyways. I'm sure somebody else will go Google that and figure out something else. But anyways, here we go. I am giving it this jumper cable set. Boom, jumper cables.
Jumper cables! So anyways, guys, do you agree with our scores? Do you disagree? Let us know down in the comments. And of course, join our Telegram group. Link us some Bitcoin memes to review because it's a Bitcoin meme review. Anyways, Phil, it's time for the Daily News, sponsored by... The Daily News is brought to you by Cloaks. Get yourself a 3D printed Bitcoin grenade. There's a bunch of other cool 3D printed stuff. And take advantage of the link down below for 10% off anything on the store, cryptocloaks.com. Check out the Daily News for today. Big deal. Maybe this is noise, maybe this is signal. I'll let you guys be the judge. But anyways, check out this article by Bitcoin Magazine. FDIC chairman, U.S. regulators exploring how banks could hold Bitcoin. Banks' BTC holdings could be used for client trading, as collateral for loans, or held as assets in their balance sheets. I think that we need to allow banks in the space, the FDIC chairman said. FDIC chairman Jelena McWillians told Reuters in an interview on October 26 that a team of U.S. bank regulators is working on a more precise set of rules for banks interested in engaging with Bitcoin and shitcoins. That would clarify how U.S. banks could hold Bitcoin in custody to facilitate client trading, use it as collateral for loans, or even hold them on their balance sheet. I think that's really the signal there, right? Look, whether you like them or not, we don't like them. We don't like, Bitcoin kind of solves that problem where you don't have to trust a custodian with your money. You could self-custody your money. But at the same time, U.S. banks definitely have a tremendous amount of cash. So, if they park that into Bitcoin, there's only 21 million and I'm not selling. Are you selling, Phil?
Nope.
Just saying. McWillians went on to say, I think that we need to allow banks in the space while appropriately managing and mitigating risks. Again, is the risk coming from banks? No, right? I mean, is the risk coming from Bitcoin? No, right? So if we don't bring this activity inside the banks, it is going to develop outside of the banks. I think that's the signal, right? The federal regulators won't be able to regulate it. Okay, so I think a lot of noise there, but I think that's the signal, the fear of missing out, right? And it looks like regulators are like, dude, you can have essentially a Bitcoin economy outside of the grasp of them. And I think that's what they're fearing, right? I think that they want to maintain that power. So in order to maintain that power, and Alex Gladstein actually wrote an excellent article about this, about Bitcoin being the Trojan horse for freedom, in wanting to maintain that dominance. What they're really not realizing is that once they expose themselves to Bitcoin, whether they like it or not, right? The old age saying, you don't change Bitcoin, Bitcoin changes you, right? So again, this is the Bitcoin incentives playing out in real time, right? And that's what you're seeing. And I think that this lady's fear is based on it's based on reality, right? So again, really interesting to see what happens here. I think that's just, I wouldn't say it's a step in the right direction. A step in the right direction is people waking up, taking their money out of banks, putting it in Bitcoin, and not letting their currency be debased so that it could pay for the state and for the government, right? Anyways, what do you think, Phil? Am I crazy?
You know what? I appreciate that banks want to not become irrelevant, right? But at the same time, when as you're reading that, all that keeps popping in my head is Executive Order 6102. That's the only thing that keeps popping in my head. For the people that don't know what that is, it's the executive order signed April 5th, 1933 by U.S. President Franklin D. Roosevelt forbidding the hoarding of gold coin, gold bullion, and gold certificates within the continental United States. And of course, right, Bitcoin is much harder to seize, but at the same time, if the banks can trick everybody into doing exactly what we've done with our current fiat money, I do agree with the Alex Gladstein article about Bitcoin being the Trojan the Trojan horse for freedom, but at the same time, I think the hubris from the banks thinking that they're gonna be able to control this, thinking that like in their minds they're like, yeah, if we hold this, we're gonna be able to regulate it. Like, I don't think you really get how this works.
That only works. That only works if they cut out the self-custody. Right? So if they don't allow people to custody their Bitcoin, then essentially what's going to happen is another iteration of the fiat system that we have now, right? Which is you have paper Bitcoin, right? It's like, oh, I have Bitcoin in my bank account. No, you don't. You don't have Bitcoin until you have self-custody, and you're the only one that knows the private keys to those addresses that have that said Bitcoin, right? So again, it's really interesting to see how they're trying to essentially regulate that, or like try to justify it in their heads, and try to keep their I don't want to say scheme, but keep their thing going, right? But anyways, Phil, moving on to the next article. Check this out. Really scary stuff. Check out this article by the Daily Mail. Accidental leak reveals U.S. government has secretly hit Google with keyword warrants to identify anyone searching certain numbers, addresses, and phone numbers. Now, I know what you guys are thinking. What the hell does this have to do with Bitcoin? That's an excellent question. Think about it from this perspective. Put away the Google, put that aside, and now replace Google with central bank digital currencies and read the article in the same way, right? So the U.S. government is searching certain transactions and putting those certain transactions on a list, right? So again, if they don't like what you're spending, if they don't like what you're doing with your money, your hard-earned money, all of a sudden, right, that could end up on a list, right? Just replace Google, put central bank digital currencies, and you could see how that's going to be abused. Now, is that happened in the U.S.? No, it hasn't happened, but that definitely happens in China, right? And they've incorporated their social credit system into this, where if you're not being a good citizen, essentially doing everything the state wants you to do, they won't allow you to buy tickets to planes. They won't allow you to go to movie theaters. They'll take away, your ability to spend on things that you want to spend on, right? Mm-hmm. So that is what comes with central bank digital currencies, is that you're giving the state, the government, tremendous amounts of power, right? And based on this article, we already know that they're abusing this power. In the US, this is completely against the Fourth Amendment. The Fourth Amendment is no unreasonable searches and seizures. I think it's completely unreasonable that the US government is searching for keywords, right? And then those individuals end up on a list, right? Just because of a certain keyword, right? Again, you know, we're entering a place in history, I think, right now that the Constitution is kind of just a piece of paper, right? But, you know, this is the fourth turning, but, you know, it's just something to be aware of, right? I think it's a definitely a good foreshadowing into what happens when governments have so much power like they have now. Phil?
I think it's scary how much big data is starting to be used against us, right? Like, there's so many better things that we could be doing with big data, and the sad thing is all we really do is use it to coerce people and to get them to buy useless garbage that they don't need, or useless services that they don't need, or, you know what I mean? Like, it's just, and again, right, that's just the tip of the iceberg. This is the easy stuff, right? This is that, like, that's how, like, they get you into this, like what you're talking about, right? You know, in terms of like using, you know, these keyword searches in your purchases, like that is like the future of dystopia. You know, like where all of a sudden, you know, you've gone and made a purchase at like the wrong CVS, you know, that was flagged for something else. And now all of a sudden, like, there's, you know, you're under some, you know, you're on some watch list for some reason. So again, I know that, and of course you'll have proponents sitting there telling you, oh, well, you know, it's for our protection. You know, it's like, no, it's not. No, it's not. That it doesn't protect you. And at the, you know, what ends up happening, unfortunately, in these situations, which, Nico, you say all the time, right? Absolute power corrupts. Absolutely. These people eventually, you may think that you're not doing anything sketchy now until the rules change, right? Remember, we are not the ones making the rules. The rules change in the fiat system, and as soon as they change to fit some other narrative that makes you an enemy, now all of a sudden, all that stuff you said and all those places you went to are now sketchy. Now they're all of a sudden now all of a sudden they're under scrutiny. So it's, yeah, definitely. Bitcoin gives me hope, but I don't have a lot of hope with when it comes to the people that wish to push this dystopia upon us. World coin.
Absolutely, and you know, I just want to, before I tie it up, I just want to read a quote by Benjamin Franklin real quickly. He said, "He who would trade liberty for some temporary security deserves neither liberty nor security," right? And I think that perfectly applies to what central bank digital currencies are going to offer, right? Security, convenience, all that stuff. But you're trading tremendous amounts of freedom in that process, right? Anyways, really interesting to see how that develops. But anyways, Phil, there was an open source software release today. Why don't you tell everybody about it?
Software releases. All right, before we get into the software releases, though, I just want to say that this new format, we don't like it, and our advertisers did not ask for it. Okay? I'm just pointing that out. This is not our doing. We unfortunately have to follow the rules. So, that being said, all right, we've got specter-desktop version 1.7.0. That is a do-it-yourself. No, sorry, that's their hardware wallet. That is the desktop wallet, that Bitcoin desktop wallet that you can also use as a multi-sig solution. Check out the link down below in the show notes.
Awesome. Thank you, Phil. All right, guys, that was our show. If you enjoyed the show, you know what to do. Smash that like button. And, of course, if you want to continue hearing the catastrophic fails, like the energy FUD that we debunked 100 times, and the Bitcoin news from the perspective, definitely consider subscribing. And we'll see you tomorrow, guys, for another episode of Simply Bitcoin.
They're going to continue blaming everything they can on Bitcoin.